accounting first chapter?
Yes, sir, I have.
Okay, I'll send the second one also. So today we are doing the second chapter, that is the regulatory framework. Okay. See, it's not only something like the accounting bodies, they prepare the accounting standards and they prepare it for the convenience of the users of accounting standards. And it is not always mandatory that those accounting standards would be rigorously followed by all the users. See, as if I say you something that traffic rules are made by the like by the government. Do you think everyone follows those traffic rules? Not everyone follows, but some people follow. Let's say some 80% follow and 20% won't follow. Why these 80% people are following traffic rules? Did you anytime uh, have put your thought process into this? So you would be like, why should I put thought process into this? It's a simple answer that if they don't follow traffic rules, they will be penalized. Am I right? Either they have to pay fines or they will be punished. Is it
Yes,
right or wrong?
right, sir.
Hello? Yeah. Following traffic rules is nothing but following the signals, not jumping the signal. And if they do that, there's a high chance of they meeting with an accident, and they will, because of their blunder, is going to cause harm to others. So if the rules are made, if the traffic rules are made and given to people, there may be chances that people may follow, there may be chances that people may not follow. Okay, but see, after making rules and implementing them and even penalizing and punishing people for not following the rules, still we see some people are not following. But one thing I would like to say you here, just a small fraction of people, like only 20% or 10% may not follow, but 80% may follow. Isn't it so? 80 or 90% may follow. Why? Because they're getting punished or they are penalized. Isn't it so?
Yes, sir.
In the same way, accounting standards are prepared by the bodies, but if there is if this have to be followed by every company, there should be some kind of system to which the companies should follow there should be some kind of system which should be given, or the regulatory bodies are the ones to whom the companies fear. Why? Because the regulatory bodies have made it mandatory for every company to prepare the statements at the end of the year, and that too the statements are only valid if they are made by following accounting standards. Understood?
Yes, sir.
Otherwise those are not the validity of those statements is something which is questionable. That means they won't be accepted by the authorities. Now, coming to this point, you understood what I mean with this regulatory authority. Regulatory authority is nothing but, in India we have SEBI, Securities Exchange Board of India, or Stock Securities Exchange Commission in United States, or to some extent some body in some country. They definitely would put they make their guidelines, and those guidelines should be followed by the companies. Okay, under that they make sure that all the companies which are making their statement should follow the accounting standards rigorously for making the statements. That means if there is no regulatory body, people will not be taking things seriously. Since there is a regulatory body which is overlooking overlooking that their guidelines should be followed, because they know that what they are giving the guidelines to the to the people or to the users is very important for them. That's the reason why those guidelines have been made mandatory. So it becomes very clear that regulatory framework is made by the regulatory authorities, and those framework is important for us. If we don't follow that, we will be in serious trouble. Henceforth, everyone would be following that. Correct?
Yes, sir.
Now, So let's start with the introduction. The purpose of this section is to give a general picture of some of the factors which have shaped the financial accounting. See, there are like today, what the accounting what we see, it is in such a shape, not because of one or two factors, but there are a lot of factors which are responsible to give shape to the financial accounting today. What we see, that means today we see the most refined form of like accounting procedures, isn't it so? So every passing year, things are made more and more easier to us or user friendly to us rather than complicated or complex. Now we will concentrate on the accounts of limited liability companies. Why? Because the entire ACCA F3 book is all about, they give much focus or emphasize on public companies, as these are the accounts most closely regulated by statute or otherwise. That means, since private companies are the ones which are run by the private individuals and there's no one to question them if they're in profits or losses. Why? Because it's their company. If they're in profits, they will enjoy the profits. If they are in losses, they will be the one who will be bearing the losses, and they are not answerable to anyone else except four or five individuals who are the directors or who own the company or who have the shares of company. But when I speak about public company, it's like the public is involved in that. That means general people or public is also investing in that company, and the public's involvement at large is very important to create a very good investment opportunity for them. Okay, since opportunity is provided to them through through holding of shares, and it's very important for companies also to, because like if public at large is involved, it will be easy for many of the companies to raise capital for their companies. Am I right?
Yes, sir.
Capital for themselves. So it's equally important for investors as well as for the needy companies. They come in contact with each other, and they fulfill each other's needs. Okay, and it creates a very good environment in a nation also, whereby investments and capital raising and raising in form of stocks, and investments are happening in the form of stocks by the people. Now people are getting a platform for investment, and companies are getting investments from people. Okay, so this is what is very important. But if public is involved, there's a lot of scrutiny and lot of paperwork, isn't it so? Because when public at large is involved, then things should be things should be highly regulated. No one can cheat public. Why? Because a very big scam, a multi-billion dollar scam, can create ripples in the market. That means can hurt the sentiments of the investors, and if investor sentiments are hurt, people again in the future, potential investors will not be turning up to that kind of market. Am I right?
Yes, sir.
Yeah. So financial statements are produced by an entity's manager in order to show its owners how the entity has performed over a period of time. Of course, company financial statements particularly need to show a true and fair view. That is always expected. And this means a system of regulation is necessary to ensure that. So regulation, why regulation? That means things should be done by following certain rules. Without following rules, you can't do things on your own as you like, because the rules are for the betterment of the people, and the ones who are making or framing the rules know that what they are doing for whom and what they are doing. Okay, they know that they are doing it for the betterment of the people, and they know that these rules are the best ones. Always if followed would give best desired results, and less scams, no cheating at all if the rules are very strong and implemented. Okay, so this means a system of regulation is necessary to ensure that financial statements are produced to a high standard and are comparable across different companies. So if you follow accounting standards, and one accounting standard everywhere is followed in entire nation. See, I'm not saying that see, if you for if IFRS, let's say, Okay, let's give a small example. In the previous past, when an Indian has to go to China, he has to learn Mandarin. Am I right? It's a Chinese language. And if a Chinese have to come to India, okay, they have to learn what? Hindi. Am I right?
Yes, sir.
Why? Because Indians doesn't know Chinese language. That's the reason they have to learn. Chinese doesn't know Indian language. That's the reason they have to learn. And it's a very tedious task. They have to put and devote lot of time for learning this. But let's say if they know some common language, which is English, do they need to learn these two languages? No. If English is known by these people and English is known by these people, the communication becomes easy. Am I right?
Yes, sir.
In the same way, if Indian accounting standards are known by Indians and Chinese accounting standards are known by the Chinese, then if they establish a company in China, again they have to send their so like statements are prepared here, and at the end of the year the consolidation would happen here. Why? Because the company has been registered in India. So if the consolidation happens, then what the company has to do, they'll send their accounting team there, and those team would be knowing the Chinese accounting standards, and they will be translating those standards to Indian standards and giving treatments accordingly and doing the consolidation. Correct? It's a very tedious task. But if I say that we follow IAS, International Accounting Standards, or International Financial Reporting Standards, and if in China also they follow this or this, then accounting becomes very easy. Am I right? No need to translate things directly. Here we follow IFRS, here we follow IFRS. Things become very
Easy.
easy and comparable. Correct? That's one. Now let's go to the next point. Regulatory system. See, of course, when I speak about regulation, I speak about legislation or laws. So national and local legislation in most countries, limited liability companies, definitely they will speak about companies law, are required by law to prepare and publish accounts annually. Every company has to do that. It's a known fact. The form and content of accounts is regulated primarily by national agency. That means if in India you have to prepare accounts, the formats what you have to follow will be given by the company's law. Am I right? Hello.
Yes, sir.
So the local legislation or the national legislation has to be followed by every company. So in India, if the companies have to prepare the statement, they have to follow the Companies Act or Companies Law for following the statement, and the format also they have to follow given by the company's law. Understood fact. Now, accounting concepts and individual judgment. See, many figures in financial statements are derived from application of judgment. See, many ways the accountants have to be very much judgmental for various transactions. Okay, and many of the transactions are based upon the accountant's judgment how the treatment have to be given, and based upon the assumptions and conventions, and this can lead to subjectivity. That means you may have a different kind of thought and I may have a different kind of thought. Our thoughts may not match. Am I right? There's a chance of there can be there can definitely be difference of opinions. Am I right or wrong?
Right, sir.
Now, working for the same data, different groups of people could produce very different financial statements. So that is the reason why this is the problem which can be which definitely can be faced. That's the reason why a common standard has been prepared so that everyone should follow those standards, and people have now come on a common platform. Now you and I cannot fight on our opinions because our opinions are not the ones which matter here. What matters is our consensus, our common consensus. That means there shouldn't be a difference of opinion, but there should be a consensus ad item. What do you mean by consensus ad item? Everyone should have a single opinion or one kind of opinion, and that is only possible if if every one of us follow a similar accounting standard. Did you understand?
Yes, sir.
When it comes to a traffic signal, you and me are very clear that we have to wait till the traffic signal till the red light becomes a green light. Are you having a different opinion? No, I have to leave. And I am having a different opinion. No, I have to stop. No, both of us are following are kind of having a similar opinion that when it's a red light, we need not cross the signal. Correct? Why? Because both of us follow the same law, isn't it so?
Yes, sir.
You and me are going on the we are always following the left side, like we don't because when we walk it is advisable to walk at the left side of the road, not at the right side. We do that, but in other countries it is advisable to walk in the right side, not on the left side. So in different countries things are different, but in one country everyone follows the same rules. In the same way, for making accounts or preparing the statements, the treatments what you give, all the treatment should be very similar, and that only is possible if a common accounting standard is followed by everyone in that country who are by whom by whom the accounting standard should be followed, by the preparer of financial statements. Understood? That is nothing but the companies or the accountants of the companies or the auditors. Understood?
Yes,
Next
sir.
point. So if the exercise of judgment is completely unfettered, there will be no comparability between accounts of different organization. That means like if different people are having different judgments always, and on based upon those judgments, everyone would be saying that I am correct, whatever the treatment I am giving, I'm right in that case. And definitely that will not be matching with the other person's opinion, because he is again having arguing that he is right in his place. Then what will happen? There will be a clash. So how this clash can be reduced, how this can be eliminated? Definitely by bringing everyone to a common conclusion that this is what is the right procedure, and there's no scope that no one can accept that it is not a right procedure. Why? Because definitely the justification is very strongly given that this is the right and ideal treatment, and definitely 99% or 95% people will be following that. So if everyone is following, definitely the majority if majority people are accepting something, then definitely there is some real stuff or some real strong reason to follow that. Am I right? So then it becomes a standard and everyone can follow that. See, there is a process of making standards also. What happens? See, in India, the laws are made by whom? Legislatures. Am I right? In the parliament, there are two houses we have, Lok Sabha and Rajya Sabha. What happens in the lower house and upper house? Debates and discussions happen. And after the debates, for what they are debating and they're discussing for making some law. So that law should be accepted by whom? 3/4 majority. Am I right? Isn't it so?
Yes, sir.
And that when accepted by 3/4 majority is again given for public comment, not directly they are implementing it. They are giving it for public comments. That means they are this particular law what they have made, they are giving to law graduates, to judges, to common people. Okay, and they're asking if any they're asking the viewpoint of different people for that, like whether if you can if you have some opinion, difference of opinion, you can come to us. That means you can give your suggestion. Again majority people will be accepting this, then this will become a law. You understood what I'm saying? So
Yes, sir.
in the same way, there is this board called Indian Accounting, International Accounting Standards Board, and they have lot of members. So they also prepare the standards in the same way. Okay, they also, like, once they prepare a standard, a lot of debate and discussion happens amongst the member countries of this IASB, and then what happens? When majority of the countries accept that yes, this is a standard which which is ideal standard, then that is given for public comments, and then people's opinions are taken, and after that if everyone is 75% to 80% of the public is satisfied, then that becomes a standard. Okay, so this is the same thing, they follow the same kind of procedure. Now See, in an attempt to deal with some of the subjectivity and to achieve comparability between different organizations, accounting standards are developed. So I said you right now that like everyone should have a common thought process, okay, or a common consensus, and the standards are prepared by the boards so that companies can follow them to give treatments to various transactions what they do on daily basis, and those treatments what they give are based upon accounting standards which are followed by all the which should be followed by all the companies, so that comparison between the companies can become very easy. Am I right? You can easily compare the results of your company with your competitors company. Why? Because both are following the similar accounting standards, isn't it so? The
Yes, sir.
treatment given by you and the treatment given by your rival company is almost the same. So if the treatments are given in a similar manner, then you can just check, you can compare your results with your competitors results, isn't it so? See, treatments are same, but the figures what you are generating and the figures what they are generating cannot be the same now. See, treatment for revenue will be given by your company and by the rival company in the similar way, but you may be generating $1 million revenue and they may be generating $2 million revenue. Those may differ, so that can show the performance, okay, but comparison becomes easy, isn't it so? Now these are developed at both a national level. See, many countries have their own accounting standards, local accounting standards like Indian accounting standards we have, and also at international level like IFRS. Okay, this is the one which is followed by many countries in the world. Now, who are the ones who are like involved in making this IFRS, International Financial Accounting, International Financial Reporting Standards? Let's go into the history now. See, IFRSF, International Financial Reporting Standards Foundation. When this word comes into picture, you can understand this is a non-for-profit organization. Now, the IFRS Foundation is a non-for-profit public interest organization established to develop a single set of high quality, understandable, enforceable, and globally accepted accounting standards. So what is the prime task of this IFRS Foundation? It was established, see, foundation in the sense they will be dependent on fundings. Why? Because they are a non-for-profit organization. Understood? So they depend on funding, they depend on donations. So many countries will give them some donation, some funding. Now based they will be getting those funding for what purpose? What is the prime motive of this foundation, or why, what is the very much need of existence of this foundation? To prepare single set of high quality, understandable, enforceable. So they make accounting standards which are of the highest quality. When I speak about highest quality, no scope of errors, almost no scope, understandable, anyone can understand easily, very much enforceable. Why? Because they have that kind of quality, and globally accepted accounting standards. So IFRS, that is nothing but the IFRS, and to promote and facilitate adoption of standards. So they are not only the one who are responsible for making these standards, but also they promote this and they ask various nations to follow their standards, because they really know that their standards are superior and of high quality than the local standards of those countries. Now, if I speak about African countries, do you think African countries have better standards than IFRS? Anyways, never. Arab countries, that is Asian, East, like Middle Eastern countries, Middle East Asian countries, never, because they don't have that kind of strong mechanism. So they have to follow IFRS. If you learn IFRS, you can go to various countries and you can even perform, or even you can work. That's the reason why people do ACCA, for that reason. Now, see, as I have spoken about foundation, definitely this foundation will have some people who are running this organization or foundation. So there will be some trustees. So it's trustees. Trustees are nothing but some people who are like, this is a trust, maybe it's a non-for-profit organization, and the trustees would be taking care of this, the financial matters and all the like day-to-day operations of this. So its trustees appoint members to the International Accounting Standard Board, IFRIC, International Financial Reporting uh, Council. Maybe this IFRIC, they did not give any abbreviation of this. that is committee. Are you following, Hamsika?
Yes, sir.
Hello, you're following. Okay, please follow. This may seem to be a very boring topic, not an interesting one, but very interesting to understand. So the trustees appoint members to International Accounting Standard Board, International Financial Reporting, committee. Okay, interpretations committee. Interpretation is nothing but they interpret. And then IFRS AC. What is this IFRS AC Advisory Council? So the trustees appoint members to all this. Okay, different organizations. Now they also oversee the regulatory system and raise the finance necessary to support it. Now, it has no involvement in standard setting process. The foundation is not involved in standard setting process. They only appoint members and they oversee the regulatory system and they raise finance for doing this particular task of making standards or setting standards. Now, the objectives of IFRS Foundation taken from its document IFRS Foundation Constitution 2018 are. So what is their objective? For what reason they are existing? The very existence of IFRS Foundation is nothing but to develop in the public interest a single set of high quality, understandable, enforceable and globally accepted financial reporting standards based upon clearly articulated principles. Okay, that means they make the standards based upon principles. These standards should require high quality, transparent, comparable information in financial statements. That means it should be of highest quality. That means no errors, very transparent. That means open for all, and also comparable information. That means, if the standards are made and companies follow those standards, things become very easy to compare. Okay, the results of the companies can be easily compared, as I told you right now. So what they are comparing, the financial statements of the companies and the other financial reporting to help investors, other participants in world's capital markets and other users of financial information make economic decisions. See, if I have good knowledge of IFRS, I can, and this is followed in various parts of the world, in almost all the Commonwealth nations, like some important economies like UK, the Canada, Australia, New Zealand, major economies are following this. Then if I want to invest in those countries, I definitely can easily understand the statements of those countries. Why? Because those companies are following IFRS standards and I can take an economic decision regarding investment. Now, again, IFRS Foundation also has some other tasks like to promote the use and rigorous application of those standards. So they are not only the ones who are funding the making of the standard, but also promoting the standards to follow. Everyone should follow, creating awareness in fulfilling the objectives associated with A and B, the points, to take account of as appropriate the needs of a range of sizes and types of entities in diverse economic settings. That means what they are doing in fulfilling the objectives associated with 1 and 2, that is what we have seen, and to take account of the appropriate, like when required, the needs of range of sizes, like big companies and small companies, different size companies are there, and types of entities in diverse economic settings. Now, to promote and facilitate adoption of IFRS, that means they are not only the ones who are involved in making that, but also they want companies to follow them and being the standards and IFRIC interpretations issued by the board. So they are promoting what and facilitating what? They are promoting and facilitating adoption of this reporting standards, being the standards, and the international financial reporting, international financial reporting interpretations committee, interpretations issued by the board through the convergence of national accounting standards and IFRS. See what is happening now. India has Indian accounting standards, Ind AS, and there is this IFRS. So the IFRS committee, IFRIC, International Financial Reporting Interpretations Committee, what they do, they converge. See, India has converged with IFRS. They have not adopted IFRS. Let me be very frank. What is adoption and what is convergence? See, adoption is taking the entire IFRS as it is. Convergence is we are following our Indian accounting standards where required, and we will follow IFRS even where we lack somewhere. That means if we don't have some treatments for certain things, certain transactions, we will definitely follow IFRS. We are following both. Are you understanding what I'm saying? Hello? Hello?
Yes, sir. Yes, sir.
Yeah, so that is called convergence. We will follow ours and will follow yours also. Now, so they promote the adoption of this, and the interpretation committee is involved in converging the national accounting standards and IFRS. That means IFRIC is the one which is doing this. The IFRS F comprises of 22 trustees from diverse geographical and professional backgrounds. So they have 22 trustees, it seems, now members. Now IASB. So now we are like about to finish this chapter. We don't have much to discuss. Okay, just one more page and we are done with this chapter. It's a small one, but one time we have to discuss. See, now comes the International Accounting Standards Board. Now what they do? See, IASB is an independent, privately funded body. So they are funded by some individuals whose principal aim is to develop. So these are the ones who are developing what? Very high quality single set of accounting standards. Okay. And also the IFRS. So see, let me be very clear. Excuse me. Excuse me. Yeah. So they make the IAS and IFRS. See, there is some history behind this that also we will discuss right now. It also liaises. Liaises is nothing but it's like bridges the gap. That means between. Liaison is nothing but between. So it also liaises with national accounting standard setters. For example, the UK's ASB, Accounting Standard Board, to achieve convergence in accounting standards around the world. So what they do is they not only prepare standards, but they also try to convince the convince in the sense through their hard work and through their commendable work on like preparation of standards. And since they are having very high quality standards, they definitely have that kind of stuff with which they can ask the other countries like boards to converse with them. Correct? That means they are not saying that you follow us directly and blindly. If you are following, see, every country would have nationalistic feelings that they say that our standards are superior and all. But you know, the truth is IASB standards are far more superior because they are professionals in that. They are the ones which are having lot many members and a lot bigger understanding than the local like countries boards. Okay, why? Because all the international members are involved in this IASB. So lot of opinions they share and they make standards. So they also work hard for convergence. Okay, that means they want the countries, the boards to follow their standards also. So their standards also in the sense you follow your own and ours even. So prior to 2003, now there's a history. Only IAS were existing. Only international accounting standards were there. But after 2003, IFRS 1 has come into picture, and then now we are following IFRS. So, but it is very necessary for you to also know the old standards because new standards are nothing new, but some modification to old ones. So old ones should also be studied, and that gives you the reason why the new ones have been made and what kind of modification was required. The members of IASB come from several countries. I said you, there are many countries which are members of IASB. That's the reason why they are from variety of backgrounds and lot of academics and different like who are the ones who are members? People from different backgrounds who are like auditors, like big audit firms, the preparers of financial statements, that means the boards of different countries, and users of financial statements like you and me, like students and academics, the professors or the doctorates in accounting, all those become the members of IASB, and they kind of give their opinions. So IASB operates under the oversight of foundation. That means the funding is given by the foundation themselves. Now, coming to the next one, the committee. So the IFRS Interpretations Committee. What do you mean by interpretation, Hamsika? Any clue?
Sir, understanding the the financial standards and telling it to the public.
Very good. See, interpretation very simply means explaining the meaning of something. So when you have good understanding, then you can explain, correct?
Yes, sir.
So what does this IFRS Interpretations Committee do? They interpret. So comprise of 14 voting members appointed by the trustees of foundation. The IFRS issues guidance on both how to apply the existing IFRS in company financial statements and how to account for new financial reporting issues where no IFRS exists. That means they give guidance on how to apply the existing reporting standards in the company's financial statements. That means since they are the ones who are known to interpret, they give the guidance and they explain how the things can be done. Correct? They explain the meaning, how you should do and how you should implement the things and how you should give the treatments, etc. The members provide the best available technical expertise and diversity of international business and market experience relating to application of IFRS, and it reports to IASB. That means the members are very much experts, and they have diverse backgrounds, and they are also the ones who are very much into international business and they know things very well. So they may be in a very better position to explain the standards to the required needy like companies or needy organizations, and whatever they do, they report to IA. The IFRC has two main responsibilities. What? To review on time newly identified not in IFRS. Can be some issues on in the IFRS, but can be there. Okay, so they always timely identify them. To clarify issues where unsatisfactory or conflicting interpretations have developed. That means they are interpreting something and that is not going well, it seems. That means what they are trying to explain to people are not satisfied with their explanation. See, if I tell you that sun rises in the east, and if I tell you sun rises in the west, can you be satisfied with my interpretation? No. Correct. If I try to interpret something to you which is like not like you may not be for example, let's say if I tell you that from here, if I want to go to Bangalore, I can go in 10 hours, but actually the usual time is 15 hours. So you'll ask me some questions now, how it is possible and all. So you'll be not satisfied with my notion. Am I right? So
Right, sir.
what is my task? To clear the things to you, correct? That's the reason for which I am existing. Amsika, are you following?
Yes, I am.
Yeah. So to clarify issues where unsatisfactory or conflicting interpretations have developed or seem likely to develop in absence of authoritative guidance with a view to reaching to consensus on the appropriate treatment. So then we will have a debate. Then what will happen if I come very clearly to you? No, see, this is the way I'm going to go to Bengaluru from Hyderabad, and this is the way like I'm going to go at so and so speed, and with this speed it is manageable to reach and I'm going to take some route which is a shortcut. Then you get convinced, and then we can come to a consensus. Correct? Now, in that way, they also will try to bring some consensus, and they with debates and discussions they would come to a appropriate treatment. Now, next comes the advisory council. See, the task of advisory council is very simple, to give advices on what matters. Let's see. The IFRS Advisory Council, formerly called the SAC, Standards Advisory Council, is essentially a forum used by IASB to consult with the outside world. It consults with the national standard setters, academics, like user groups and host of other interested parties to advise the IASB on range of issues from the IASB's work program. So what happens? This council is nothing but the one which is known to give advices. Okay. It's essentially a forum, that some forum kind of like online, maybe it may have a website or some kind of office or some kind of contact place whereby they may accept on that address, they may accept people's opinions, viewpoints, or on their blog, you can, on their website, you can send some information, whatever you want, or some mails you can send to them on something like related to accounting standards or something. So they invite everything from around the world, but from whom? From those like parties, or those people who are always involved in this particular accountancy subject, isn't it so? Now, so who are the ones who are always involved in this accounting profession? The accountants, the auditors, the academics who are teaching, or who are the students who are studying, or the national standard setters. Okay, so those are the ones who are always working on this accounts or accounting field, correct? So they always invite opinions from them, and what they do, they do that under their works program for developing new IFRS to giving practical advice on implementation of particular standards. So IFRS Advisory Council meets the IASB at least 3 times a year and puts forward the views of its members on current standard setting projects and advises IASB on its agenda and timetable for developing IFRS. So that's what they do. Now, next comes scope and application of IFRS. See, any limitation of the applicability of specific IFRS is made clear within that standard. Okay, that means you are going to apply, you are going to give treatment to some transaction on based upon IFRS. So to what extent you can give, what can be the treatment, what is the limitation you have to follow, everything is explained to you in that particular IFRS. Okay, that particular standard. Now, IFRS are not intended to be applied to immaterial items, nor are they retrospective. Okay, what do you mean by retrospective? Hello?
So that it makes no difference.
No. See, IFRS are not intended to be applied to, see, first of all, what is material and relevant to you, to your business, those transactions only you will be giving treatment to. So for unnecessary things, you need not follow IFRS, the things which are not necessary for your business. Second point, something which should happen from the beginning, that's called retrospective. See, treatments of certain kinds, if you're giving certain treatments to something, it would seem that that thing has happened in the beginning itself, but not right now. Okay, I would explain you that retrospective thing with some detailed example. For example, if I have to tell you retrospective, see, retrospective is nothing but something which is there from the beginning. That is called retrospective. Understood?
Yes, sir.
Retrospective meaning is nothing but mm, I, like if I have to say, looking back. Okay, or past events. That is retrospective. Understood?
So could you give an example?
Yeah, I'll give the looking back or directed to the past or past events. That means something which has happened in the past already. See, giving treatment in such a way that something has happened already, not right now. You understood, na? See, there are two things. Retrospective means something which has already happened in the past. Prospective means from now onwards we'll follow this. See, for example, if changes in accounting policies. So if you want to change your accounting policy, that means if you are following a straight line method and you want to change that to diminishing balance method, you have to give a retrospective treatment. Retrospective treatment means as if you have to change. See, since 5 years you are following straight line method, na? Now because now due to some reasons your accountant is like judgmental that this method is not good for the company because it doesn't suit your company. In the sense, for example, if you are buying a car, you're buying a car for personal use, then definitely straight line method is good for depreciation, correct? Correct. Why? Because you are using the car for personal use and every year a single amount, a fixed amount can be reduced from your car's value. But if you are using that car for taxi purpose, do you think straight line is good? No. Why? Because during the earlier years, you will be using your car to the maximum level. And you know that during the early years, more and more amount of depreciation should be removed from your car. Am I right?
Yes, sir.
That is like, I'll not take this. There's a method called double declining method, which is not there in IFRS. It is there in US GAAP. It'll help you to understand more properly. So like what they say is during the earlier years of your car usage, if you're using it for a taxi purpose, you can remove twice the amount of the straight line depreciation from your car's amount. Like for example, my car is of 100,000 and straight line depreciation amount is 10,000. I can remove twice of this 20 from my car's value. That makes sense, correct? Why? Because you're using for taxi purpose and during the earlier years, it will be depreciated highly. Am I right? Because as the time passes by, like after 8 or 10 years, your car will become almost a scrap and you'll not be using that much that car, isn't it so? So whatever depreciation should happen, it should happen in the beginning because the usage is very high in the beginning. Is it right?
Yes, sir. Right.
Hello?
Yes, sir.
Correct
Right.
or wrong? Hello?
Sir, can you hear me?
Yeah, I can hear you. Yeah,
Yes, sir.
did you understand this example?
Yes, sir. I did. Yes, sir.
So now if I want to change from straight line to suppose let's say diminishing balance method, I have to give a retrospective effect. That means as if I've been using diminishing balances since the beginning. I'll explain you that how we do and what's the reason we do that, and that's not the matter right now. Just you should understand whenever you change your accounting policy, you should give retrospective effect. That means you will make changes in such a way that if anyone who sees would see that diminishing balance method has been followed since the beginning. That effect I will show you afterwards. It's not right now required. You understood now?
Yes, sir.
Yeah. So IFRS are not intended to be applied to immaterial items, nor are they retrospective. That means they are not from the past events. Whatever you do, you have to do immediately today. When it comes to IFRS, the treatments you are giving should be fresh treatment. Understood? So each individual standard lays out its scope at the beginning of the standard. That's the reason they are using the word retrospective. They are not retrospective. Whatever they are explaining from the beginning, everything. Now, application. See, within each individual country, local regulations govern. In India, we have Indian Accounting Standards Board and Indian Companies Law, etc. To a greater or lesser degree, the issue of financial statements. See, every country has their local. See, every country has their own local regulations, correct? Laws. And with to a greater or lesser degree, the issue of financial statements. Fine. So within each individual country, local regulations govern. So in India, if you want to make financial statements, you have to follow Indian companies law, and the formats also what you use should be based upon the Indian companies law. These local regulations include, that means you have to follow Indian accounting standards given by the Indian Accounting Board or body, that is international Indian like ICAI, Institute of Chartered Accountants of India. So these are the this is the body which gives what? Which gives the Indian accounting standards to India. Am I right? So in India, if you make statements, you have to follow the standards given by the Indian Accounting Standards Board, which is this, and also the local laws. That is the Companies Law of India. Now, standard setting process. So the IASB prepares IFRS in accordance with due process. You do not need to know this for your exam. That's not required, but like like as a matter of some interest, if you want to put, you can do this. So first comes IFRS Foundation, which has 22 trustees and they get the fundings from various organizations. Okay, there are this particular IFRS Foundation. Under that comes the IASB, which prepares the accounting standards, and they take advisors whenever required from advisory council for any. Suppose like there are two members in IASB, and those members are having some kind of a difference of opinions or clashes. So the council can try to normalize their concerns and can try to bring them to a common consensus through advisors. Am I right? And then comes the committee, which explains the meaning of the standards prepared by the IASB. Now, last and final point here, then we will be just closing this topic. Role of IFRS. See, international financial reporting standards provide guidance as to how transactions events should be recognized. Okay, that means when and where you have to record those transactions. That is what the standard gives you the guidance. So what is the guidance the standard gives? The guidance the standard gives is how will you recognize a particular transaction. With recognition, I mean, suppose let's say I write something in front of you, property, plant and equipment. So